Hello and welcome, Kunal. Let's understand the commodity strategy because overall, if you go to see, we've got a spectacular run, at least in terms of where the equity markets are concerned. Now, taking this into consideration, the first thing that we need to understand is what is the outlook that you have, especially in terms of where crude is concerned, because all the bets are on OPEC plus output cut. Now, do you think this is something which is relevant or completely irrelevant for the commodities market right now?
What has happened is that if you see what has happened is the curve in Europe of COVID-19 and curve in US, the main economies, we've seen the flattening of curve. So there has been no significant increase in the cases. So we were at 5 lakh cases 10 days back, and we are from 5 lakh, we are right now at 12 lakh 40,000 cases roughly. So this number was the speed of from 5 to 12 was very quick. But now since from last 2 days, the curve is flattening in Europe. That is the reason the optimism is coming out. The things are started to look more stable in Europe. And even in US, the number of cases yesterday increase was not exponential rise what we've seen in. So that is one reason. Second is there is optimism coming that we will see some sort of vaccination which will be made by this Australian group of researchers, and these things have led to optimism. So now coming to your second part of the question, whether the this OPEC meeting is relevant or not, it is very important, because what has happened in crude oil market is that crude oil market from a deficit of say 500,000 barrel, 1 million barrel, it has gone to a surplus of 5 to 6 million barrels. And if this 15 drop in demand continue for next 15 days, 1 month, then we will have a humongous surplus. So there are countries such as Canada, they are not having enough storage capacity. So this is very important. OPEC Plus must get it right here and do the production cut to the tune of 10 to 15 million tons on the conservative basis. So I'm talking about the 15% of the global oil supply should be sucked by OPEC Plus. So when I say OPEC Plus, it is Saudi, all the OPEC old members plus Russia, and including US. So even Saudi and Russia wants that US production also should go down. So there was a news last week that one of the shale oil producers filed for the bankruptcy during last week. So this kind of cases will keep coming up if oil is at $20, $25. So I think some solution. So I don't know, that meeting is on 9th of April, but before that, we are going to see some optimism. It is very difficult to say that they will come up with such humongous production cut. But till the meeting, I think the sentiment will remain buoyant, and I don't know what is going to come out of that meeting. It's very difficult, but till then, we can see oil can reach levels of 2150, maximum 2200.
Right. So Kunal, taking these points into consideration for a trader today, what is the kind of strategy that they should be adopting? And from a longer term perspective as well, where do you see crude trading at?
I think taking this into consideration, I recommend to go long at declines. We've already seen a good upside. So any decline of 40, 50 rupees downside during the day, one should enter into long position. First target should be 2150. Second target should be 2200.
Okay. And moving away from crude again, the other bit that we need to really talk about is right now gold. In fact, last couple of months, we have been actually discussing this, that gold is a safe haven where majority of the investors are placing their bets. However, we did see some bit of selling pressure that did come in terms of gold as well in the interim. And that was mainly where traders, investors were actually covering their margins on the equity markets. But from here on, with the kind of volatility that we are seeing in the equity markets, what's the outlook and what's the strategy for today?
Well, like I explained, we have given a target of $1,700 and $1,800 in our yearbook. So our first target has been achieved, 45,000 on MCX. That is what we have been recommending. So our first target for gold is achieved, and I'm still bullish on gold. I'm not sure whether correction will come or not. Corrections will keep coming in, but the trend definitely remains on the upside. The reason for that is that the G7 central bankers are going to pump liquidity in the financial market to the tune of $5 trillion, and US itself is going to expand their balance sheet, which is right now roughly hovering at $5 trillion to $9 trillion. This is the expectation what I'm having. So huge amount of monetary debasement is taking place. When I say monetary debasement, the value of paper money is decreasing. So the value of gold is going to increase. I'm not talking about price. I'm talking about the value.
Correct.
And
Correct.
hence gold looks very, very attractive. So I would not say that a correction cannot come. Yes, it can come. We've seen 5,000 rupees straight run up. And remember, Indian gold is still at discount as compared to the international gold by $40 because of the lockdown in India. So
Correct.
I'm very bullish on gold. And for trading perspective, keep a strict stop loss of 44,800 and go long for the upside target of 45,400. These are not the levels where you can be complacent and you don't put a stop loss. I think stop loss is must for the intraday traders or the 1 or 2 days trader. But the trend for gold and silver both remains on the upside.
Right. And very lastly, what's the sense that you're picking up right now, Kunal, with base metals? Because as per at least news reports, there is some bit of stability that's coming in the Chinese markets. Now, do you think that there's something which could provide some bit of impetus to the industrial metals? And what would the strategy be and the topic on the industrial metals front?
Yeah. So if you look for what's happening in China, Wuhan has started. The epicenter of the coronavirus is now have started to resume the operations normally. People are coming to Wuhan. The traveling also is now allowed. So now the restrictions within the China are lifting up and economic activity is started to rebound. Remember, China accounts for the 50% of the global consumption of base metals. Hence, with the China stabilizing and expected to come up with a huge stimulus package, we expect that metals to do well going forward. And in particular, we recommend to go long in zinc because we are going to see a massive production cuts in zinc. So zinc market was expected to be in a surplus at the start of the year. But now we are expecting going forward, a couple of big mines are closing down. So zinc markets is expected to be in the deficit of 0.35 million tons. So hence zinc looks attractive proposition. One can go long at 148, 149 and expect prices to test levels of 153 for the intraday perspective, and slightly longer horizon, you can expect zinc prices to test levels of 156 to 157 on MCX going forward.
Right. All right, Kunal, thanks for sharing your views. So that's a buy call coming in on zinc from the industrial side. Again, we will be looking at crude as well as gold as a safe haven. Thank you, gentlemen, as well as ladies who've joined us on this call. To understand strategies from Kunal, in fact, we will be touching base with you every day to get you commodity strategies for the interim. Thanks for watching.